Hey everybody, we're getting ready to trade June, week 4, 2020. We are pretty much trading the end of the quarter next week. Historically, the week after June OpX tends to be a little squishy, a little weak. And we did see some selling after the bell on Friday that took futures down to a point that would have S&P challenging something on the daily chart. And I'll show you that in a minute. But for the moment, we still had, even as bad as Friday's selling seemed, we still closed all the way up here at not a new weekly closing high, but you know, still at a very strong point, well up into the range that we have had achieved by June week 1 and June week 2 of this month. The key area to watch out for next week, and especially whether we open here above or below here on Monday, is 30.38 to 30.44. That's this little blue bar here on this chart. This is where we either opened or closed for the last 3 weeks, and then the week that we just, for 3 weeks, and then last week we opened down below here, explored a little lower, and then moved up. And so this coming back down here and closing like this on Friday is not that bad when you look at it on a weekly time frame. If we come in and open again below this 30.38 to 30.44 level on Monday, this low that we made last week is probably not going to hold, and we're going to sell off. And we're going to hit down to our 28.63, or even go the distance to our halfway back at 27.92. And I'm not saying all in one day. I'm saying over the course of the week. Next week is the last week of the quarter, in that all the trades next week settle in Q2, settle in June. There are 2 more days of June to trade when we come back the week following that. But those 2 days, the trades will settle in Q3. So anything that trades through Friday stays within the quarter. Okay, so that's what's going on there. And if you want to know more information about the 28.63 and the 27.92 level, I went over those in a lot of detail in last weekend's video. So check that out if you haven't already. Here is our roadmap chart, our daily chart. Here is our 10-day simple moving average, which was pulled over in a hooking formation here with the selling that went on Friday. So if we do come in weak next week, this is going to pull right down and cross down through the 20-day. And it's going to give the market a sell signal and more fuel to the downside. ES traded all the way down to about here after the bell on Friday, so it would have taken us all the way down here to just look above Monday's close and almost fill in completely this gap to Monday's close that we have left open all week. So that's kind of like a telling sign. So if we open even lower on Monday, if the futures open on Sunday and sell off and cannot recover back above this area by the time we open on Monday, then chances are that's it. We're going to just go ahead and sell off. And like I said, our first target is going to be 28.63 and then 27.92. And of course, by way of bouncing around a little bit off of maybe the 200-day, so on and so forth. You know that you really have all your levels in here. And also one thing I wanted to show you, which is why I kind of reiterate to you that when we get into monthly OpEx, it's important to understand that monthly options settle with what the ticker set gives us, which is the underlying averaged open of all of the stocks in the S&P 500. Well, the S&P opened all the way down here at 3140 something, but June settlement was 20 points higher at 3161. Quite a bit of difference between where we opened and where we actually settled. And then, of course, we sold off on Friday and closed all the way down here at 3097. You know, like, what are you talking about? You know, like 65 points lower than what the settlement price was. So the end of day options for Friday got this, but the opening options for the day, the June settlement, got this all the way up here. So that's kind of interesting and a really like juxtaposition of what the 2 sets of options got you. So in any case, if we open up strong, if we open above Friday, if we gap up in any way, it's probably going to be an effort to try and open above this 10-day simple moving average on Monday in order to fend off the possibility of this bearish cross pulling through. And then we're going to finally break on through this 3140 area and on up to make a higher high and further up into this gap that gets us back to where we closed on the Fed day, 3190. And you remember this week, this 3140 area, um, you know, for every time we tried to make a rally happen, you can see it here. We would get just above it and then just sell off. We even opened above it on Friday, looked above and failed and sold off. So I think your dreams of catching the top and shorting this market on down to 37, or 27.92 will be dashed if we come in and trade through 31.40 easily on Monday, because I think that means we're just going to keep on going. And what they want to do to end the quarter is push us up higher and higher, and then we sell off maybe towards the end of next week and continuing into those 2 days that happen the week following that. Okay, I'm going to leave you at that. I hope this all makes sense. If you have any questions, please just send me a direct message. As always, good luck and good trading.